Hi, good evening. Okay, with that, I'll be starting the session. I guess each one of you guys, you managed to have that PDF. There was a PDF that I shared with everyone, I think was 3 weeks ago. It talks about the basics of trading Forex. It's called School of Pipsology. So that PDF, it's one of the best material as a newbie or as somebody who's new can actually learn from, because it has all information that you need to get started and become a profitable trader. So if you have been with us for the past 2 weeks, you will notice that you're going to notice that some of the contents that I'll be scrolling down here, we already talked about, and it's just to assure you that everything is on this PDF, okay? So we talked about types of trading, fundamental analysis, and technical analysis. Just a recap. Fundamental analysis is whereby you trade based on what is happening around, like mostly it's based on trading the news. So while technical analysis, here, usually you trade using indicators, or you analyze the chart, look at what the candles are saying, and execute your trade on that. Usually, people who do technical analysis or who trade using technical analysis, they don't care of what is happening on the market. So for them, I mean, on the news, for them, it's like, what is the what are the candles telling me? So before they execute any trade, they look at they look on their charts. Okay, so those are the two types of trading that we have there. Just a recap, and also there might be few things maybe I skipped there. And also the types of charts, usually this you'll see them when you open your MetaTrader 4. We have line chart, bar chart, and the candlestick charts. So these are the types of charts that you usually see when you open your chart. So I'm going to stop here and show you where to find those charts. Okay. All right. So when you open your MetaTrader 4, this is what you will see. Okay. So when you go up here at the top here, you'll find where it says charts. Here you have a bar chart. You can select and it will show you something like this. This is called a bar chart. Or you can go here. This one is called candlesticks patterns. And then you can also go here. This one is called line chart. Those are the three types of charts that you'll see when you trade Forex. There are people who use bar charts, some people use candlesticks, and some people use line chart. So the most common one is called candlesticks. Okay, so how to access them? You can go to charts and then you toggle them there, or you can here. If you go at the somewhere here, you can see here we have one and another one here and another one here. All right. So that is where to toggle those charts. So most of the charts, they have purpose. They form different purposes and also based on strategies. Okay. Let me go back to here. All right. So and now if you go on the next part, we talked about this, that whenever you see a candle, you'll always find four things. You'll always find its a high, its low, is open and is closed. Okay, and if you did attend the last time session, you will notice that we talked about like we'll always have the upper shadow or the high, and also the lower shadow or the lower. Okay, this is the low of the candle, and then this area here, we said this is the opening, and this area here, we said this is the close. All right, so this candle here, it's a bullish candle. It means the price is going up. Okay, and then for the bearish candle, the opposite is kind of like the same, right? So those are the few things that you should always keep in mind if you are new to Forex. Okay, like here, still showing the same thing, and let me show you that on a chart. So if you go to a chart, you will see okay, where is my dot? Okay, there. All right. Okay. So if you look at this a candle here, let's focus on maybe this price action here, so that you can see what I talk about. Okay. If you focus here, this is a pound USD daily chart. So the same thing, you can notice we have the low here and we have the high here. All right. And because this is a bullish candle, you'll find that on that day price opened here, right? And then price closed here. Okay, which means this is called the open and this one is the close. And this one is called the high for that day. And this one is called the low for that day. All right. This is for a bullish candle. Bullish candle, it means the price was going up. Okay. For a bearish candle, this one, this black ones, it's a bearish candle. And while these white ones are called the bullish candle. Like example, let's look at this one for the bearish candle. So for this one here, it means price opened here and it closed here. All right. So the low for that day was here, and then the high was here. All right. So whenever you see a candle, you have to always have that in mind. You have to understand that. That is very important for you to understand as somebody who is new or who is a newbie to trading Forex, okay? Because every strategy that you're going to learn, it will be looking at it will be based on you understanding these basics. All right. So let me continue. Yeah, this ones we passed it. So remember, this is the book that I shared with everyone. So, okay. All right. And then the other things that is very important for you that you have to know as a new trader is something called the basic patterns. We have one here. We have the Marubazu. Marubazu candle, by definition, it says Marubazu means there are no shadows from the bodies. The high and the low are represented by the open and close. Look at this candle here. This one is white Marubazu, and this one is black Marubazu. So the white Marubazu, it usually represents price going up, while the black Marubazu represent price going down. Okay, it's very important candle. Okay, so now here is just a definition that you have to know. It says a white marubazo is a long white body with no shadows, which indicates a bullish trend. It forms when the open equals to the lower and the close equals the high. This indicates that buyers controlled the price action from the first trade to the last trade. It usually becomes the first part of a bullish continuation or reversal patterns. Okay, and now remember this: when you trade, is either you trade with the trend or against the trend. And as the rule says, if you follow the trend, you will make money. If you are against the trend, you're going to lose money. So why these candles are very important is because they are actually telling you what is currently happening on the market. Okay, so here a simple definition: it says it usually becomes the first part of the bullish continuation or bullish reversal pattern. Usually when the market reverses, it will print a candle like that. Okay, so and usually also when the market continues, it will print a similar candle. Okay, so now let's go to the chart so that you can see what I talk about there. All right, so if you look at this chart here, it's pound USD again. So looking here, we have different candles there. Okay, so remember we should have something called marubazu, which could be a bullish marubazu or a bearish marubazu. All right, so those candles, they are rare usually to find in a chart. Okay, why? Okay, let me like example here. Okay, let me look for exactly for the exact candle so that you can see something. Okay, the definition there, it was saying usually a white marubazu, it will means there is a bullish continuation patterns forming. All right, so example here, you can, this is a marubazu. So this candle here, it is a marubazu. So look, usually you can either have totally no wikis like this, okay, or you can just have a small tiny wikis in the candle. Okay, continuation patterns, usually it means price is going bullish continuation pattern, it means price is going up, right? While the bearish ones, it means price is going down. Okay, it shows that more buyers, like here, it shows that there are more buyers who are willing to push the price up. Usually when you see a pattern like this printing in a chart, there is a high possibility of price going up. Okay, most of the time that's what happens. So there are times that yes, you'll see a candle printed like this and the market will still go down. And also that it also depends on something. Okay, there are every scenario as it happens, you might find that most of the time, for you to judge where the market is going, you'll need maybe 3 or 1 or 3 candles. They'll always tell you where the market is going. Okay, so in this scenario here, we are just looking for marubazu candles. Okay, so what is very important for you is to know what it means and to be able to identify them on the price chart. Okay, one here, this is marubazu. Another one here, it is a marubazu. Okay, let's check. What more? What do we have? Okay, another one here. Another one here. This is a marubazu. This is a marubazu candle. And this also is a marubazu candle. Usually those tiny ticks. Okay. Okay, so let's go back. Okay, so usually this is how marubazu looks like. I'll repeat that again. It's like that, or it will have a small ticks, just small ticks at the end. Okay, yes, so that is what marubazu in short means. All right, and then we also have a candle pattern called spinning tops. This candlesticks with a long upper shadow, long lower shadow, and small real body are called spinning tops. The color of the real bodies are not very important here. The pattern indicates the indecision between the bullish and the bearish trends. It means whenever you find a spinning top candle, it means there is indecision. Indecision means the buyers that are not sure whether to buy or to sell. All right. So most of them, when you find them, it means there's indecision in the market. Okay. So what happens for there is usually people or traders, when they see these patterns, they will just wait for the next signals. All right. So, and also remember, if you see spinning tops with other candles, it can mean something else. All right. So now we're going to go on our charts to see if we can find spinning tops candles. Okay. So when you open our MetaTrader, we will see spinning tops, right? We have one here, that's spinning tops. Okay, spinning tops. Okay, yeah, so I'll repeat this again. What is very important is when you open a chart as a trader, is for you to understand what every candle represents or what every candle means. All right. So let's continue. Okay. So for here, and also we have another candle pattern called a doji. All right. Doji lines are patterns with the same open and close price. All right. And here it says, ideally, the open and the close should be equal, while a doji with an equal open and close will be preferred. It is more important to capture the essence of the candlestick. Doji convey a sense of indecision or tug of war between buyers and sellers. All right. So price moves above and below the opening level during the session, but close at or near the opening level. The result is a standoff. Okay, I guess you understand what a standoff means. All right, so it means there are the same number of buyers and sellers on that level or on that pattern. Okay, take example like this. Let's say you will have okay, what actually it means on that particular time frame there is a balance, or there is if 50 people bought that asset, it means 50 people will have bought that asset and another 50 people will have sold that asset. Okay, which means there is a standoff there. All right, still a doji, it represents indecision. Okay, because from there, if it's 50-50, it means the market can move on any direction. All right, so usually if you trade these patterns, you have to make sure that a doji should be with other candles to be able to tell you in what direction you should trade on. Okay, because a doji on its own is not enough for you to execute a trade. For you to execute a trade, you need a proper signal, okay? Which in this scenario, it will be helped by doji with other patterns, okay? So for those who, just for the sake of everyone to understand, we can look for dojis in this chart here. Example here, we have a doji here. Okay, this is a doji. All right. Remember we said it means indecision, a doji. This is still a doji candle, a doji candle. All right, a doji candle. All right, yeah, I think that's spinning top. Yeah, so you can see every candle is there on these patterns here. Okay, so let's continue with our session for learning about these candles, because it's very important for you to learn about them. Okay, and so here we also have, it says doji and the trend. The relevance of a doji candle depends on the preceding trend or preceding candles. That's what I already said, okay? I said doji on its own, it won't help or it won't give you a signal to trade, all right? So it says after an advance or a long white candlestick, a doji signals that the buying pressure is starting to weaken. Okay, so what is being said there is that whenever you see let's go to the patterns, let's go to the chart, let me explain this. It says whenever you see a white candle like this, guys, is a marubozu candle. Okay, you'll see a marubozu, which is a bullish, means price is going up. Okay, and then you see a doji here, it means people who are buying this. We can see people who are already buying here. It shows that people were buying. So when a doji is printed, it is a sign that now those people who are buying, they exited the market. Okay, so what it means they exited the market, it means they closed their positions, or it can also means now people, when they got here, they closed their positions and entered sell, or more people started to buy when price reached that area. Okay, so and then it says after a decline or a long black candle, a doji signals that selling pressure is starting to diminish. All right, so what does this actually mean to you as a trader? If you are somebody who's scalping, or you are trading any kind of a method or a strategy, so when you see a doji printed, it's a question to say there might be indecision, or the buying pressure is weakening. It meaning people are no longer buying. All right, so people are doing what? They're selling. Okay, so the same thing for the black one. The black ones, this one, which is a bearish ones, is that whenever you see on the bearish pattern, when you see a candle formation like this plus a doji, it means the sellers are starting to weaken. Okay, or the selling pressure is failing. It meaning price can either return there, or it can either continue. All right, so let's look this on our chart, because that is very important. Let's see if we can see those combinations of patterns. All right, so we are on our daily chart. So in our daily chart here, let's look where there is a doji. Let's show the best one for you. Okay, so there was this pattern here. All right, so people, what we can notice here, usually in an uptrend on the trendy market, you can see here people were coming here buying, the trend was high, and then a doji was printed here, and immediately when doji was printed, usually after a few candles or so, the market will reverse. Like here, it was printed, and then there was a final push, and then the market turns. The same, let's look here. Okay, so people were selling on this candle, and then doji candle was printed, meaning there's indecision. So what happens, it immediately after printing that doji, the market turned. Okay, so this candle, it signals people were buying. All right, and then spinning top was printed, and remember we said spinning top, what does it represent? Indecision. Okay, spinning top, so it means if you were to trade this, it will say it was indecision. First one, doji, meaning people are no longer selling this. All right, and immediately this candle came, which means people are buying. All right, after people were buying, this candle were printed, which represents that now people are, there is indecision. Okay, indecision, it means the people who were buying, they were now not sure if they should continue buying or sell. All right, so which means for here, usually if you're trading this as a signal, you will move your stop loss to entry price, or you'll take your profits. All right, and what happened? Spinning top, indecision, then the market fell. All right, so that's what those patterns, guys, means. All right, so let's continue with our candles. As a new trader, I'll repeat this again, is very important for you to understand what all these candles means, okay? Because with that information, I tell you that it's actually a build up to every strategy out there, okay? And then here we have something called reversal patterns, like we are saying there. We have more long shadow reversals, hammer, hanging man, yeah, and like example, when you see this candle here, it's called a hammer. Whenever you see a hammer there, it represents that the market is reversing. A hammer market reverses, all right? So usually for me, I rarely use these patterns like the hanging man and the hammer. I'll tell you why later on, okay? All right, inverted hammer shooting stars. Inverted hammer and shooting stars, okay? It's still, these are still something called reversal patterns, all right? You can just know them whenever you see them. You have to be cautious, you have to trade with caution that the market might reverse. Right, so now the very important concept that we have to know when trading now, it's something called support and resistance, trend lines and channels, all right? So for me, I'll be focusing a lot on trying to explain support and resistance to you. So what does support and resistance means? So here it says support and resistance is one of the mostly used concept in trading. It's widely used, guys. Strangely enough, everyone seems to have their own idea on how you should measure support and resistance. Let's just take a look at the basics first. On every strategy, guys, there is something that is called the basics of every strategy. After that, there is the people go deeper now to understand more about those patterns, all right? So resistance, usually as price goes up on a bullish day, or when price is going up, price will reach resistance. After price reaching resistance, it will turn. Price usually turns at resistance, all right? When price turns at resistance, after that, it will go to support. When price reaches support, it shoots, okay? So let me show you something here. Okay, let me show you this on a chart. All right, okay. So if you look at this chart here, you will find that price turned here. Okay, let's make this just red so that you can see it. All right, this is where price turned, right? And again, price turned here, and again, price turned here, and again, price turned here, and again, price turned here. So let's look at this. Remember, I was drawing this. The only patterns that I was drawing the latest ones. This, and this, and this, and this, right? And what else is, I was doing also this one and this one, all right? Okay, just for you to understand, I'm going to draw this one also so that you can see something here, right? So on this chart here, price turned here, okay? Why did price turn here? Is because previously it turned. Like you can see here, price rallied, like price went up, down, went up again, down, went up again. Here, there was resistance there, right? So same thing here, price, you can look at this pattern here. Why did price, it came nicely like this, and then when it came here, it turned. Why did it turn there? Because of this area. Okay, it touched, then went down, right? And even here, you see here, that's where price actually turned. If you go further down there, you might find this area or another area this side, it was touched by that, and that's where price turned. Okay, so resistance and support, usually in short, it just to tell you that whenever price reaches where it turned before, there is a high possibility that price will reverse, will turn again. It's like, oh, I turned here before, again turns. So if it passes that area now is going to become support. Where price turns is the resistance, all right? So after it passes that area, it will go down again, test that area, and continue with its move. So usually, for you to be able to draw support or figure out how to draw support and resistance on a chart, for me, I personally use the line chart, all right? On my line chart, I will connect these areas. Let me do this all delete. Okay. So okay, let me just make it small for you. Touch there. Okay, so if you notice here, if I adjust this, usually I'm going to draw this based on the last price actions. On the last price action, using line chart, I make sure I just put a straight line connecting where price turned previously. Okay. This connected there, and then somewhere here again. And then do we have any touch? Usually 2 touches. 1 is 2, 3 here. Okay, so price touched here, touch here, it will touch, it will touch. Same thing, even after days or years, you'll see these areas. Usually when price comes in this area, is bound to react. Okay, Same thing. Let's look at this one here. Even here, you see when it's even reached here, just made a small reaction. Here, same thing, same thing, same thing, same thing, same thing. Let's do this one here, same thing, same thing, same thing, same thing, same thing, or same thing. And where's the other one? The top one here, this still, same thing, same thing. Okay. Same thing, same thing, here, here. All right. So if you had to trade this as your strategy, I bet you will be around 60 to 80% profitable. Why? Because you just simply draw the line charts. You turn this chart into a line chart and you draw your lines, right? And what you do is that you always know, get aware that whenever prices reaches this area, there will always be a high possibility of price doing something there, reacting. A reaction, usually it could be a reversals. So now, if you are a trader, I guess you've been aware of, you will see some people who use maybe 20 as a lot size. Some people use 10 as a lot size. Why? Because they trade these areas. Why? Because usually for these areas, you might find that a price will react only maybe 10 to 20 pips. All right. Just 10 to 20 pips is just enough for other people. Okay. If you get example, if you have an account with 100,000 and you trade support and resistance, when price reaches there, usually it reacts 10 to 20 pips, and then bang, you get that 10 pips or 20 pips with lot side of 10, you already made $1,000, right? So in short, let me clear this for you. So in short, price, it will always move using zigzags, right? It touches the area, it comes back actually like this, like this, like this. Okay, so it passes the area, it goes back, it comes back to touch the area, right? Price will come here, reverses, touch, support, pass it, go back. Yeah, price will always move like that. For this, I guess for you guys, I shared this, the video that explained this for you in detail. I guess everyone managed to download it and watched it, because as you are new to trading, it's very important for you to understand those basics. All right. So trend lines, we'll talk about some later, not today. All right. And the channels, for me, I don't use channels for now. So it's something that you can also learn more about as an individual, so you can master it. And Fibonacci, I use it, usually I use it to measure how high the price is, right? So, and this, I don't use it most of the time, Okay, I'm not going to focus on that. And moving averages, and I use it once in a while. Okay. And I rarely use indicators, because what is very important for you as a new trader is to understand the candlestick patterns and formations. Those are indicators. Those are indicators, channels, double tops, which I call that valleys and V's, head and shoulders. Usually head and shoulders, you might find that they are made up of reversal patterns. Usually these are things that repeats. Okay. I'll skip that. Yeah. And the other important thing that you have to understand as a trader is there are different trading strategies and different types of traders. We have long-term traders, short-term or swing traders, and we have intraday or day trading. All right. The type of trader you are, it will depend on what kind of job you do. Some of you do trading as part-time, some of you do trading as full-time. So usually to be a kind of a trader, a certain type of a trader, it will depend on how much time you have. All right. A typical example, if you spend your whole day at work, you should dedicate maybe 1 hour, 2 hours when you knock off focusing on trading. All right. If you are somebody who's rarely having time to trade, then do swing trading or long-term trading, because with that once you can wait for a setup to get triggered or to work in maybe after weeks or days. All right. And usually long-term traders, they use sell stops, limit orders, and the likes. Okay. They usually don't trade current price, right? So they do what? They set their triggers. If price reaches there, it triggers, and they don't usually watch the charts. Intraday or day trading are those who usually they are scalpers, right? They spend hours and hours behind the computer looking for trading opportunities. All right. Okay, the other important aspect is called trading using multiple time frames trading, or you have to make sure you analyze all the charts, right? So, and for most of you guys who are new, I want to tell you that trading is a skill that needs time. And for you to be able to trade, you should be able to analyze at least a minimum of 3 time frames. Example, if you are somebody who trades 30 minutes time frame, it means you have to analyze starting from H4. If it's 30 minutes, you have to analyze from 1 hour, from H4, 1 hour and 30 minutes. All right. And if you are somebody who if you open your positions on H4, you have to analyze from weekly, daily, and execute your positions on H4. All right. And if you are somebody who execute your positions based on the daily time frames, which means your analysis should focus on to do a multiple analysis, you should focus on monthly, weekly, and execute your trades on the daily time frame. All right. So because if you were to analyze only on the daily time frame and execute your trade on that time frame, there is a high chances that you're going to lose your money. Why? Because the bigger time frame is always more powerful than the lower time frame. Example, support and resistance on the bigger time frame, they will always be stronger than support and resistance on the lower time frames. All right. So how do you do multiple analysis? Okay. If on the H4 somehow it says you can enter a sell when you reach that area, it should show the same thing on the 30 minutes time frame, that when you reach that area within an H4, you enter a sell positions. All right. Because when you open your chart, you'll always see, let me show you this on a chart to help you understand something here. Why it's very important to do multiple analysis. I'm going to show you example here. One, this is a monthly time frame. Okay, so on this monthly time frame, price, it went down and turned here. Okay, and then at the top it turned somewhere here. All right. So if we go on our weekly time frame, these are the areas. All right. So which means, okay, look, which means if price comes here, we are preparing to sell. Let me make it. Okay. It's object list. Okay. I wanted a nice color that's transparent. All right. So if price, this is where price at lastly 10. Okay. So this is the monthly time frame. Okay. And again, price went down and turned here. So on the weekly, we have to find the area where price will turn. So look here, this is monthly, right? On the weekly, you will find this area. That's where price turned. And the bottom one here, it's still that one. So if you are to put your sell, you will still need to go under on the daily. So on the daily again, you will see that price went up, turned, trigger your position, went up again here, turned, because it's a bigger time frame. Trigger your sell position again if you missed it. And then again, price went 10 up here. Again, you'll come here, do your, wait for your position, because you know, oh, it turned here. Again, you draw, price will come again, 10 here, trigger your position, same thing. Here, it will turn, trigger your position, goes down. This area, you'll see them nicely forming on the third trading sequence. Again, here, price went up, turned here. It will come here. It will turn here. So yeah, sometimes it fails. Yeah, sometimes it can fail. Failing, it means if you are somebody who were aware of that price was turning, it's reached the monthly and is supposed to turn there on the weekly, then you will be sure that you will have made maybe you will be having around how many winning positions? 1, 2, 3, 4, 5, right? So this one is not yet turned there, all right? So why you are not supposed to take a sell, I mean a buy on these areas is because of the bigger guy who is monthly. Okay, monthly is stronger than the lesser time frame, meaning whenever price reaches the area of resistance on the monthly or support on the monthly, it's bound to react and turn. Okay, so when price is here, there's no more buying, guys. If you buy, it's suicidal, right? So we are doing only what? Selling. So if we're going to sell this, if I would, okay, analyzing this, guys, we are going to sell pound USD until we reach this area. At this current time, pound USD, guys, we are selling. If your time frame is daily, we are selling. Okay, so now the next thing is this, guys, it had nothing to do with the news, with what is happening in Russia. Mostly the bigger time frames, they don't care what is happening around the world. Okay, so expectation is for price to go down to this area. When it reaches this area, this is where we expect price to go up. It's simple like that. Okay, so that's why I wanted you guys to understand that when you are trading, it's very important to do your analysis at least on 3 time frames, because that is key to trading, and we call that multiple analysis. Okay, Elliott waves. So now, as a new trader, guys, this is page 97. Page 97 is that it's very important for you to trade your own strategy, not someone's strategy. You have to trade the market as you understand it. You learn the basics. After learning the basics, you trade the market as you understand it. All right. And also for that, you will be helped by somebody you regard as a mentor to help refine your understanding about how the market moves. Step number 1, you select your 3 time frames that you are focusing on. Step number 2, yes, you can find indicators that can help you to identify a new trend, right? Number 3, you can find indicators that helps you to confirm the trend. So number 4, risk management is key when you are learning to trade. Number 5, you have to know where you are entering your positions and where you are exiting. Okay, those are the super important steps that you should have or that you should follow as a new trader. As a new trader, don't look at the chart and decide to enter. No, we don't trade like that. In trading, we don't do that. All right? You follow a set of rules. Okay? The rules that you follow is either you win or you make a lose. You lose. Okay? You lose, it helps you to further modify or panel beat your strategy. Okay? Final step, write down your system rules and follow it. Your rules for trading, it should be your law. You should have at least that commandments, right? Some people, they have like, okay, when I'm stressed, I don't trade. Those are the commandments for trading that will help you, okay? Your friends, they will tell you that, hey, gold is falling. If your rules they are saying is not good time for trading, don't trade. All right? Yes. So with that in mind, guys, I believe that most of you already know the basics. If you don't, if you're still struggling with these basics, there's a content, a folder where I did put everything that can help you to understand those basics. So starting from today, for those who will be still struggling with these simple basics, I'll ask you to privately talk to me so that I can help you on that. Because next week, we're going to start now learning a certain strategy that I've been trading. Okay, so I guess that would be a good time for every one of you to get on board and become serious now with your trading journey. Okay, with that, I'll say today's session it's over there, and in that time we managed to finish School of Pipsology book, which is a basic, which offer a solid basics for everyone who is new to trading. Okay, with that, I'm going to stop sharing and I'm going to allow questions.
Hello.
Hello there.